Hey, this is Sean Hyman from The Logical Investor. Sorry about the delay with all I had going on with my house yesterday that's being built and that active market. It totally slipped my mind that I had not made the weekly video. So here it is. And I'm going to be brief because I got to get on the road. It's put me a little behind, but that's my fault, not your fault. So I'm going to record this video and then I'm going to leave for my trip. So the S&P 500 is rebounding just a hair on the weekly and daily charts. So on the daily chart, you've got the S&P rebounding just a hair off of a positive, a somewhat positive non-farm payroll report, which is basically all the payrolls except for farming. So you had a number that was slightly under expectations, but not near as bad as what was expected to be. The last 2 months of revisions were slightly better, so that kind of made up for that semi shortfall in the main number. But the main hires were government and healthcare, so it wasn't all that broad based. Where there were some job losses in retail and of course manufacturing. So it was kind of a, not too hot, not too cold kind of a report, but it definitely wasn't a bad one. Unemployment rate did go lower. Black unemployment rate, Hispanic unemployment rate are very, very low, which could help Trump in re-election, etc. So the market took it overall as a semi-positive. So you've got kind of a mild rally out there that still possibly may fizzle as it comes up and heads down. By the way, stock charts, it looks like, has stopped allowing us to go back any more than about 4 or 5 years on charts. So I will probably have to use another charting package for long-term charts for a while, or I'll end up having to sign up for one of their pay packages. So just to let you know there. So I'm going to go through these positions quickly because I've got to get on the road. So the report was mildly bullish for stocks, which of course is a little bit tepid in the near term for gold. So it's just kind of hanging out, and again, this could end up, having a deeper pullback, before heading higher, or it may have already had its three-wave pullback and gets ready to head higher from here. It's hard to say for sure, but either way, the trend is still up and very, very bullish on GLD overall. Remember, the markets are overvalued. That overvaluation has to come out. The Fed can't stop it. No matter what they say sometimes, they've never been able to stop a recession. And so that, the business cycle still goes on, and overvaluation has to come out of the market. And as that does, it's great news for metals. FXB has had its three-wave downward move and has broken above that and has had its first pullback. You're starting to see the RSI and MACD head higher, a little bit of buying spike there. So overall, I expect this to head higher. Could we get one more dip before heading higher? Sure, we could. But I'm expecting that to head higher as the worst of the news in that area, I believe, is behind it. EWW has been very resilient, and matter of fact, it could be. It is too early to tell just yet, but it could be setting up to form an inverse head and shoulders pattern, which, if so, is a very bullish pattern. It's where you have a shoulder, a lower head, and a higher shoulder that ends up, breaking forth that way. And again, it could always, the shoulder could be built like that or whatever too. So, but if that's the case, and it's too early to tell just yet, then I see a move heading higher there. Either way, this that we do already know is bullish, where you have this rally up, three-wave pullback, higher low here than here, and so I'm looking for a push higher than this high here as well. And so that potential pattern could help that be noticed by market participants and even help that around as well. RSI was strengthening, selling volume still less. MACD still strengthening, so very bullish there. So I think it's a great time for Mexico and Mexican stocks, and we are positioned well. LPL, this one, again, it's just like I said last week, same scenario where there's a number of these positions that have already had their three-wave declines that are over with, and we're into the next overall advancement. So here's the first wave of that. Here's your first three-wave pullback after that. We're getting ready for our next advance. You can always have some further decline before that, but I'm looking for that next thrust higher. RSI is getting higher, MACD is getting higher, selling volume is getting lower. So that's all bullish for that. And then again, with them selling more screens to Apple, that'll be a positive for them as well. BBBY just came out with earnings the other day. It beat on earnings, missed on revenue, and so and they're closing a few more stores, which will help them basically get rid of some unprofitable stores and things of that sort. They've still got plenty of cash, still in good fundamental shape, so they've got time to still turn that around. I believe they're in their process of turning it around because they had been missing earnings and now they beat earnings. Now they only missed on a revenue expectation, which is better, and so I'm bullish on it. Keep in mind too that stocks turn around before the seemingly bad news of them turns around, but the RSI is strengthening. The selling volume is continuing to lessen. You've got a buy spike here more recently. MACD's been picking up steam, so I believe we're over the three-way pullback that it's got, and I believe we are getting ready to head higher for it as well. So again, very bullish on BBBY. Then we have got CAJ. So Canon, same scenario here. Many of these value stocks are following the same pattern. They've had their latest ABC, which you got ABC here, drop that's already happened. Now we're into the next cycle upward. So 1, 2, 3. Whether it could be something like this, either way, but 3, 4, 5, etc. to head on up. RSI is strengthening. Selling volume continues to decrease. Your MACD is breaking a downtrend there. It's above the zero line here. So I'm looking for this next thrust higher, and we will eventually top these highs and then some. And so, again, very bullish on CAJ. So liking what I'm seeing there. KHC is still meandering around, but what we are seeing on it so far is here you had drop and lower highs and lower lows, and what you may be having here, because it's too early to tell just yet, but you may be having a higher low form for the first time, and we are seeing higher MACD, which is good. RSI. We have been seeing a higher MACD that continues to strengthen. The selling volume continues to die off, so the sellers just really aren't there. It's anemic, so it makes it much easier for the buyers to take back control there. So I'm looking for that to have its next surge higher fairly soon. It'll need to break, and it's with this gap down, it's kind of hard to exactly say how that is. You could draw it a couple of different ways, but it comes in at roughly the same spot. Once it breaks above 32, 33, it could really get off to the races quite a bit faster. So again, very bullish on that one, and pays a decent dividend in the interim while we wait. Then ENI, I believe the next major move for oil is higher, which I talked about in more detail in the past, so I won't go through it here. But we got our latest big ABC correction here, and you've even got one there as well that has been broken here. So just like the other stocks, I believe we're on our next up cycles. We're on our next 5 waves up. Here's 1, here's 2 pullback. So I'm looking for 3 to head higher. Now, could 2 go deeper before it goes higher? It could. We'll see. Doesn't matter to me either way. No big deal. RSI is strengthening. MACD is starting to show a little bit more strength here. So this will probably turn up and head up higher there. So again, bullish on what I'm seeing there with ENI. And then we've got SLV. So same thing for with the market being overvalued, that overvaluation has to come out. That's bad for the indices overall. It's good for metals overall. And so there's always something going up in the market, and right now it's metals. So you've got higher high, higher low, much higher high, and then we'll have a higher low here. No matter whether we're done with it here and it goes higher, or if we go a little deeper before we go higher. Either way, you've got your three-wave pullback here. We're in that C wave now, A, B, C, and it may be over here. It may come a little lower, but then we get that next advancement. We are touching oversold here, which is good. The selling volume continues to die off. We're getting closer to another MACD buy signal, so that's all bullish as well. So very bullish on metals overall. And I'd warned you ahead of time with this big move up that it probably needed some three-wave pullback or five-wave consolidation that could have it kind of not producing much over the next month or two or three or whatever before it gets its legs again and gets ready for its next move. And hey, I won't skip CHL this time. So thanks for letting me know that I looked over it when I was hopping around doing some of those other metal plays more recently with them moving so much. Somehow I skipped the China Mobile. So China Mobile, here's your ABC downward move that is done. It is broken that C wave in its next into its 5 waves up, I believe, where it's 1, 2, and then we're in 3 right now. So I'm looking for this to go higher, and that might be 3, 4, 5 that gets us to back above our original break-even point on our original shares, and then you've had averaging downtime that'll be your true profitability on that position. And but your MACD is strengthening. Your selling volume continues to drop, which is a good thing. Your RSI continues to strengthen. So again, all bullish signs there. So it's very, very solid stock. Then we've got PPLT. You could almost say ditto with metals. I mean, money's moving into metals overall, and so you're seeing the same pattern: higher high, higher. That's just a slightly higher high than here, but it is a higher high or higher low rather. And then this goes to a much higher high, notably here. So the buying pressure really comes in here. 3-wave pullback here. This is probably over, being that we're close enough to the 200-day and we're past the 50-day. So this probably just heads higher, up and down on its way higher here. But, if it did go back a bit further before higher, no big deal. We are oversold and trying to come out of that now. The selling volume continues to drop back off, and then the buying volume has been accelerating. The MACD is getting higher, and we flattened off here. So that's another sign that this is getting less negative and getting ready to turn around for another buy signal to take that up higher. So very bullish on platinum overall as well. And then we've got our recent pick, which is XOP. So this one is, I believe, poised for greatness as well. It hit our, of course, we got in our buy price and it dropped quick enough to where it got down to our first averaging down point by just a tick or two, a penny or two yesterday at 20.48, and 20.50 was the average down point. So those of you that preemptively put in limit orders, a number of you got filled, and my guess is probably those that are just trying to eyeball it and look at it was such a small window of time, you probably missed it. Or if you were trying to do a market order, then you may not have gotten filled, because limit orders that are in on previous days take precedence over at that same price, that take precedence over your market order today. So they're further up in line towards the exchange of executing, and you're further back in the order flow line as a present market order at present day versus limit orders that have been there previous days to that. So that's how that works. So a lot of people don't think about order flow and how that works. But so if you put in limit orders, good for you. You're filled. You got an averaging down. If not, oil may dip a little deeper in the near term, and this 2120 may come back down to that 2050 and allow you to average down. But I do encourage the limit orders because you don't have to sit there and watch it. We are seeing improvement on the MACD. The selling volume has dropped off quite a bit. The massive buy spike here, which is awesome. We're oversold on RSI, trying to come out of that. So we may or may not, get back to that. This is too early to know whether we, have anything like this or if we just bump and take off from here. Either way is fine for us. If it takes off faster, then we get a quicker profit. If it goes down, then more people get to average down, and then it goes up, then we get a bigger percentage profit. So either way, it's a win-win for us. And it's too early to tell whether we're turning around just yet or not. But the thing that had been so bullish to me was that it had broken this downward corrective line, popped up, and now we are testing that area. And so where I got my 2050 from was this low here was 2038, and just in case we didn't get back to this ultimate low, I wanted us to have one averaging point that was just a hair above that, and then our next one quite a bit below that, so that if it were to drop deeper, our average break even by the time we get 3 in is still at around 20, which is still at around the historical lows for XOP, and then rally there. So it was a strategy that is working out well with the averaging down piece of the strategy. So again, loving the improving technicals. I believe oil will head higher overall. Oil has been paring back lately, so it's had its three-wave pullback. The question on oil is, and again I've said it before, is if we've been heading higher here. This was wave C, this was wave 1, and this is definitely wave 2. The question is, was this all of wave 2, or do we go even deeper? If so, we can still be in an uptrend even if we go a move like this and head higher, because then this just gets, in other words, we don't know if this is the bottom of 2. If it is, this is the correct trend line. If 2 goes lower and the ABC could go lower, we don't know that, then it gets drawn there. Either way, you've still got wave C heading higher. Excuse me, not wave C, wave B heading higher. Wave 3, I will get it. So we've got the RSI heading higher. We've got MACD heading higher. We've got the selling volume starting to slump a bit. We've got a buy spike there. So there's a lot of positives for oil. So again, we could just kick up and head higher. We could go lower before we head higher. Really, ultimately, doesn't matter, because we still got that wave 3 that is coming, and so that will greatly benefit us. Same thing on Brent crude, and I'm going over these charts just to show that they look pretty similar, and that we're still wave C. Here's wave 1. Here's wave 2. Question is, if this was pretty deep, going from 86 to 50, so that may have been all it was, just more of a shallower 3-wave pullback, or we could be in for something that's a little bit deeper there before we hit wave 3 and head higher, and it'd be something like this, rather than something like that. But either way, we've got, and of course, wave 2 could always be a 5-wave consolidation sideways. I doubt that it'll be that. It's looking more like it's a 3-wave pullback. So with oil already being, in a 3-wave pullback and consolidating somewhere around this 200-day moving average that's rising, both on WTI and Brent crude, and with XOP being at historic lows, I wanted us to make sure we were in on that, because that's definitely the embodiment of pessimism. You got your RSI and MACD rising, so things are looking good there. This 200-week moving average, which was declining, is now increasing. So even though people are negative on oil. That's always the case in wave 2 and wave C. So, people can't say, well, oil can't go up because sentiment's so negative on oil. No, that's exactly the times when oil can go up. Sentiment is the most negative at the bottom of wave C and anywhere in wave 2, or actually in the latter parts of wave C and anywhere in wave 2. And so, of course, sentiment's going to be negative. So you'll never be able to look at the news and go, oh, it's time to buy because sentiment's turned from negative to positive. Because by that time that happens, you're already part of the way through wave 3, and you've missed waves 1 and 2, and part of wave 3 waiting on sentiment to turn positive. So you're way into the next trending move by the time the sentiment turns positive. So trends turn first, sentiment turns next. So that's why you'll never be able to use the news as your indicator. Okay, thanks so much for watching, and God bless. Bye-bye.